Welcome to NYPAY's first in-person event in over 4 years. We will discuss open banking, opportunities and challenges for fintech and bank adoption. We want to thank our annual sponsor, Further Advisory, whose support has made all of this possible, and K&L Gates for providing this space.
Fintechs, and a lot of prepaid. And welcome to K&L Gates.
Yeah, to me, so Sheila Fitzgerald, president of the Batavian Advisory Group, a consultant firm in the payment space. I come from the Visa side of things, worked there for 10 years, so was the head of global security and integrity for the payment system. And then, I've been in payments for 26 years, came into card service. Open banking is not my strength because I'm very adamant in payments, but it's a very interesting subject, and I was involved in the aspect with T was a part of that Visa, that was integration, so I had some visibility there.
Hi all, I'm Jane Barron. I'm the Chief Advocacy Officer at MX, not Amex, letter X. MX is data services and software that enables money management from budgeting, network tracking, mobile apps, insights, so definitely payments enablement, but not payments proper, if that makes sense. And so I had come into the fintech space, formerly was a fintech founder, and Max was actually my data partner, and I think the last time I did one of these events was like 2016 maybe. It's been a while. But yes, very happy to be back, and in the 6 years at MX I've been driving all of the open banking initiatives.
Hi, my name is Gary Stein. I'm a partner and co-founder of 99 Fintech. We're a advisory firm. I've been in banking and financial services for about 35 years. Was a banker, did hardcore banking, consulting, deposits, lending, wealth, commercial, consumer, and then hit my midlife crisis and decided to join a brand new regulator called the CFPB, and interestingly went into lead policy there on the deposit side with overdraft, and like a lot of banks, everything was focused on the balance sheet, not really on the movement of money. And so somebody had to take over payments, and I led the payments policy there. Early in my tenure, we looked at this thing called Section 1033 and decided—
I've heard of that.
Well, we'll talk a little bit more about, I think, what it was intended to do, but then put that on the back burner. But later on, I led the policy there for that, including the RFI, and the ANPR was my mic drop moment. Then became a fintech operator for a couple of years before launching that.
First of all, just wow, well, all of you guys have such great background, and I think this is going to be a perfect way to approach this difficult issue. And I'm starting off by just laying a little bit of groundwork here. I get this question a lot, like, what is open banking? Ryan, next slide. Thank you. So it's funny, open banking is the process that gives consumers the ability to share their personal information with accredited third parties through specific secure application interfaces and that meet regulatory and industry standards. I know what's interesting, I spent a little time going online to say, well, let me get a really good definition. And some of the definitions say, open banking is what gets Fintechs access to consumer data, but the important word here is it's not just, an easy way to help Fintechs access bank data, which historically banks have, and for good reason, I want to make it very clear, for good reason, banks have guarded this data very, very securely. This was a very important part of their relationship with their customers, and of course, banks face a ton of liability if they let anyone else get access who shouldn't have it. So but the key in this definition is that it's really the consumer's call. This is really the beginning of a whole set of privacy rights for consumers and giving consumers, and there was a time when I thought this was a mind-blowing concept, that a consumer owns their own data. Now, it took the Europeans to teach us this, and And I think that we are finally, catching up with the rest of the world. But the concept is, the banks have always had your financial data. This is going to not just voluntarily allow banks to share, but it's going to require banks to share their data, provided certain regulatory safeguards are in place, provided the consumer has consented. And a lot of people think that this is really the future of financial services. So I'm now going to be turning to our guests and talk about some of the key issues. Open banking has gained significant traction around the world, and I'm throwing this first question out to Gary. What do you think are the driving forces behind the open banking trends?
So first of all, we are only getting to the point, I think, where we're broadly using this term open banking. I can tell you at the Bureau, the Section 1033 doesn't use those words. When I wrote the Consumer Protection Principles, is consumer authorized data access. I think the rule now is personal financial data rights. Part of that was because they felt that maybe Europe hadn't gotten everything right and tainted the concept of open banking, and we didn't want to use that. So that's not to discredit this panel here. We can all talk about it, but it's funny. I mean, fundamentally, as somebody who grew up doing things like branch placement and other archaic, banking things, it's really, this has started from the digital movement, right? So technology enables online account opening and things, and then as we've seen, bandwidth grows and, generating capacity and all this other stuff. And I think we all realize that the key to making that happen is data. And as Judy said, it's data generated by consumers or businesses and held by financial institutions. And so fundamentally, I think there's been a realization that that is the asset that's going to be really critical here. I would say, though, that there are a few other key trends or thoughts here in the US, at least, that are shaping how we're thinking about open banking. So first of all, it's interesting that Section 1033 is part of the Dodd-Frank Act, so it was written in 2009, put in place in 2010. So they were thinking about this back then, and we couldn't do half the things we could do now. I do fundamentally believe that the intent at that point was somebody thinking, consumers are held captive by their banks and they can't move their accounts, they don't have portability. This will enable it. And I don't think that the lawmakers understood how payments settle, the time that we live in a debit pool world or anything like that, but I do think that was probably a driving sense, and that continues to be, I think, a dream for a lot of folks. I think in addition to that, what has shaped open banking or consumer data sharing here has been the way that innovation has arisen in the US. And I won't call banks fat, dumb, and happy, but I think they're, let's face it, it's a regulated industry and innovation, and they have consumer accounts both on the deposit and the lending side. And lo and behold, now you have technology companies that are using those tech assets that aren't regulated entities and can envision products that maybe banks aren't rolling out quickly. But those entities don't have the data, the financial services providers do. And so to make them work, they have to have some kind of shared access. So that's shaped it. And then I think the other thing that I always think about in this world is, we're trying to create this safer sharing ecosystem that we're going to be talking about. And so what are the parallels? And to me, one of the biggest parallels is in payments. You need payers and payees, merchants and issuers and everything. And we've seen and continue to see battles over interchange and security standards and such. And so I think it's with that in mind that shapes kind of what regulators and others are saying we do and don't want to see happen in the data access world. So I think those are some of the big trends there.
Yeah. Great, and let's now talk a little bit about the consumer side of this. Jane, how do you think open banking can enable consumer choice and consumer empowerment, and in terms of the future of payments?
So I think super big picture, financial services has run on stasis, right? You open an account, the average account holder in the US has had their savings and checking account for 17 years. Right? And so there hasn't been a whole lot of competition because, payroll goes in there, write your checks, and then over the years, what's happened, to Gary's point, significantly more competition around niche use cases that are becoming more and more mainstream, which means that people aren't necessarily moving away from their checking and savings account, but they are opening up things that work better for them, whether it's peer-to-peer payments, whether it is pay by bank, or
Sharing, right? And it was very regulatory driven from the UK. And then it became pretty much very market driven in the United States, like with the payment networks jumping on the bandwagon and saying, hey, we could leverage this for payments, and obviously we're talking a lot about payments, but it all came from initial data sharing. That's really where it started. But from a risk perspective, on the data sharing end of things, the whole idea is what could go wrong? Well, data security, obviously, right? So it's very important that data shared in a secure method with proper authentication and with the consumer's consent. So that's really what open banking was all about. But now when you enter payments, it adds a whole new dynamic of risk, right? Once you start actually moving funds, a whole new set of regulations kicks in, a lot of other risk. You have regulatory and legal risk, compliance risk, you name it, credit risk. And a lot of fintechs that jump into this world, and I've seen this personally very many times. Fintechs are like, hey, we're a tech company. This is great, we can do this. Not really understanding that what you're getting into now. And it's like, and they're like, yay, we can do this. And the next thing you know, you see a huge mushroom cloud. And you're like, what happened, right? Well, we didn't know it was so regulated and there was fraud and things like that. And now we're like 5 million short and blah, blah, blah. And so I've seen it. So I think when it comes to risk, yes, initially data sharing, have your data security controls in place, but when it comes to payments, that's the next level. Have a control environment, understand what you're getting yourself into, and that's what I think.
And for so long, the way that fintechs were doing this back in the day in the UK and in the US is through screen scraping. It's considered the way to and talk about a risky behavior. I think that's one of the positive changes that might come from having this kind of access regulated, but it's not regulated yet, so we're still seeing what happens. I'd like to have the panel all share, if you can, some of the use cases that are out there for open banking that you think are the most interesting or exciting or just the best for consumers. You want to start?
Sure. I mean, I think there's a lot I think that gets me excited about these, but in general, there's an ability to bring in a lot more information and for institutions to make much more informed decisions, right? So ultimately, whether that's for the movement of money, the opening of accounts, the management of accounts, the provision of services, the risk management decisions should be much better than informed. And that should take cost out. Now, arguably, there's providers today that might benefit from an information disadvantage, with somebody on the other end, right? They know more. But ultimately, think about it. Lenders are making loans imperfectly. If not, they would have 0% delinquency rates and charge-off rates. And so there's an opportunity to reduce that and to put those funds either to more competitive services or value-added services. So I think, to me, anything there that helps the consumer figure out and by the way, we're also seeing, right, think on the credit side, like a specialization of credit services. It used to be you got a mortgage, an auto loan, a credit card, maybe a personal loan, and now, you can finance any purchase and and pay for healthcare differently than you can pay for luxury goods. And that's good because then the lenders know the risk they're dealing with and they can set that cost better. So I think the ability to inform risk management decisions and provide a more efficient ecosystem is good for everybody and should broaden access as well. So that's one understanding.
So I'm gonna answer on a spectrum. Just
Yeah.
excited now for the fact that people do get more transparency, right? So you can actually see, see what's going on with your money and be able to get insights that are much more personalized, not just marketing insights, but actual personalized insights around what your next best action is. I think that paves the way for much more financial automation, right? Because again, just think of yourself, from me, we still all carry an incredibly heavy load to manage our money each month. It's stupid, the stuff that we have to remember to do, right? For an industry this big, come on. So like starting to get into things that, we can trust, that institutions can trust, that providers can trust. It's like, okay, let's automate that. And it's gonna take my mental load down that maybe I can focus on doing more investment or something else. But just, I think that's where I'm really excited about where this is going from today. And, we see it in our own data. When someone gets a beneficial use case, so we have an insights product that is based on your data. Once someone gets that insights product, they either double or triple the amount of accounts that they aggregate in, because they just saw value. It's like, oh, I'll bring in my credit card, oh, I'll bring in my credit union account, oh, I'll bring in my 401k. And then, they're getting better advice. And just, we're already seeing that uptick of behavioral change in the industry, so it is a logical next step to automation. I think the flip side of all of this, something else I'm excited about, is just the reduction in data exhaust that's out there. Right? If you think so, my first career was in the marketing world, and I got out of it because of ad tech, and just how much data ad tech was able to suck in, everything they knew about you, and we're all being sold on the second, every second, for our whole life. And our financial data is our most valuable data. Financial and health data. We have people for health data. We don't have an equivalent for financial data. So I'm very excited to see that data results get reduced.
Well, thanks. Gia?
All right, so I know we looked at it from the consumer side essentially, but I want to flip it over a little bit too, since we're talking about payments, and that's kind of where I came from, is look at it also from the merchant side, right? So the payment acceptance side. The payments acceptance side has been very heavily reliable on the payment networks, right? That's where essentially, when the card's presented, that's how they make their money. But now having open banking as an option, potentially using it as pay by bank channel, that's kind of like a new thing, and potentially maybe less costful than the payment networks are. It still has to evolve, but now when the payment networks come in, is they're like, well, we could augment our existing networks with, open banking to, basically continue, doing the payments between the consumer and the merchants. And when you really look at it, I mean, I know there's a big initiative underway to standardize APIs, right, to make it standard, right?
Yeah.
But then you look at, okay, so API is a hook that a fintech has into a bank to receive and push data. And that's what Visa, MasterCard have been doing since the 70s, right? They have hooks into all these banks, and it's transaction data, so it's maybe not as broad as what open banking can provide, right? But that's additional information that Visa and MasterCard can now suck up, and not only use, but they can also have banks, not just providing data, but also as API consumers, right? Getting data as well, to use for underwriting or other purposes as well. And I think in that respect, that's really where things are going. They call it interchange. That's where the term interchange comes from. They already have that going on. They're gonna continue to build on that. And they're potentially even going as far as to start competing with ACH in the United States, and things like that. So, that's kind of where I think things may be going. A lot of the payment system, a lot of payment acceptance still dependent on ACH. Fund settlement is done through ACH. So, Visa, MasterCard, I'm like, well, what if we could take care of that too, right? So that's kind of an interesting concept, but yeah, there's my 2 cents.
Yeah, I love the focus on merchants. Are you willing to take a question?
I guess the spirit of my area, Dave probably has the same question I do, but quick question for you. So I can definitely see why banks would like pay by bank, but what is the advantage for merchants and for customers with pay by bank? And do you think any advantage will flow to the merchants and to the customers?
So wait, the question for those who didn't hear is, what is the advantage for merchants of pay by bank? But obvious, there's an advantage for the banks, but
Sure. Well, I think for merchants, like I touched on earlier, I think cost is a big one, right? And right now, there are, for instance, you can order things online through a gateway and you know, use your bank account number, right? And punch it all in. But it's somewhat cumbersome and you may have to do it over and over and over. What if there's a fintech provider that just sucks in your banking information? It can, you know, touch on all these merchants, like Tink or Platinum or whatever, right? So in that sense, yeah, exactly. So in that respect, it becomes really a cost issue. It becomes also better, you know, like not offering various payment exceptions, not just Visa, MasterCard, and what have you. So to that extent, I think that's where merchants are going to be happy that there's going to be another
It will
choice.
bring the cost down, and not that the banks will kind of consume the benefit for themselves and charge.
So the comment is it really gonna help the merchants, or will the banks consume the benefits themselves? Well, you know, that's where regulation comes in.
Well, I mean, I would just say, look, I think the hook is the promise of something lower than what you're paying in interchange, right? That's the dream. And like the Fed and FedNow intends to set their fees lower than ACH. So sounds pretty tantalizing, right? But I mean, I think people have to think, what is a payment system? Like all the stuff she had described there, the ability to get credentials, to authorize somebody. It's not just the rails that things settle. I mean, cards today settle on ACH and wire, but we consider them a separate payment system. So I think some of it will be what's required to build all those things. And this was going to come up in a later question, I think, because I think the world of open banking and everything that she had described may help in a good way, but maybe one that also makes us nervous to accelerate, you know, pay by bank. And what we don't have from a regulatory standpoint is a clear set of rules and liabilities in a credit push world, right? Everything we have with Reg E accounts and Reg Z is based on the premonition of unauthorized access, which comes from debit pull. So in credit push, I can tell you my theories, I'm no longer at the Bureau, but you know, I do think that there is something emerging. You're seeing Zelle getting, you know, hammered by Congress about, you know, fraud in there. And so there's a responsibility, I think, in the payment networks to keep those out. How that plays out in the remediation of somebody whose account was taken over or who fat-fingered something, I think we're still seeing that play out.
And you mean,
One other thing I
yeah,
really
please.
want to add on to for the merchant benefit, and this is something for the industry to keep in mind, is, you know, Visa, MasterCard have very elaborate protections around, you know, fraud control as well, you know, for instance, consumers are not held liable, as well as for merchants when it comes to dispute rights and things like that. Whereas it's not quite built out yet, like you said, you know, on the open banking side. So some merchants that are dealing with a high amount of disputes or illicit activity want to gravitate potentially to that, you know, segment because they have better, the merchant has better protection than the consumer does. So that's just one other thing to keep in mind. So be careful, like, from that perspective.
which is the disincentive to the consumer who's accustomed to be able to dispute something.
Yes.
Yeah. Is that what you wanted to add?
Well, I was going to ask something about regulation, but carry on.
Okay. Well, I wanted to jump ahead to talk about 1033 and Ryan. So I just have 2 slides here, just to, again, to lay the groundwork. Not everyone has had the great opportunity to take a deep dive into this. It's a very lengthy proposed regulation. And just as a few lead-on comments, as someone who's spent a couple of years working out of London where open banking has been around for a long time, though, you know, slowly building up. It hasn't been completely well adopted everywhere, but it's building up. I just thought it was so striking, the difference between the view in 2018, and this shows you the difference between presidential administrations. And so back in 2018, back when I was still working in London, the US took the position that they were not going to do any data sharing regs, and that the Treasury thought that it would be best served by a solution developed by the private sector. And those were their nine non-binding consumer protection principles. And of course, any lawyers in the room would know that non-binding means that really, no one really does it.
Doesn't happen.
I hate to say it. It's like you aspire to it, but you don't really do it. So this is like 180 degrees different view, starting in 2023 when they proposed the rule. And again, I thought it was kind of interesting that they did not mention the word open banking anywhere in it, probably because for some of the other baggage that's contained in that concept. But they're implementing Section 1033. The rule gives consumers more access to their banking data. Personal financial data rights rule would challenge industry to compete for customers, protect consumers from excessive surveillance, and help people walk away from bad service. And to me, one of the great advantages is helping consumers be able to change banks. I've had to deal with my 20 and 30-year-old kids trying to change banks, and it is very hard. So there has been a comment period. It ended, but you can now start looking at their comments. Next page. So I just wanted to sort of outline very quickly for people who aren't familiar with it, sort of the key provisions of what this rule would do. It would require data providers, which is a very lengthy definition of what a data provider is, but it's the entity that's holding the consumer's data, usually it's banks, to make available to a consumer or an authorized third party upon request the covered data in the bank's control concerning a covered product or service that the consumer has obtained from that bank. The data has to be provided in an electronic form or in an API usable by consumers or the authorized third parties. And the third parties is so important because that's where the Fintechs fit into this. Banks are prohibited from charging fees. This is one of the #1 areas that banks have complained about in their comment letters, as you can imagine. Yeah, what a surprise. And I don't blame them. This is a cost for the banks. Banks have a heavy burden already. They're one of the most heavily regulated entities, and I don't blame banks for wanting to be able to charge a fee rather than having to take the hit themselves, but I don't know whether that's going to change. The banks are also required to establish procedures to ensure the accuracy, add more cost to the banks for that. But the third-party providers also have an obligation. They've got to ensure privacy, security measures are in place. They have to ensure that the consumers give informed consent. And you can imagine, that goes on for pages and pages within these regulations. What is informed consent? And then there is a date set for compliance, because this hasn't been passed yet. It's not a final rule yet, but the compliance dates themselves will differ depending on the banks, the size, complexity. So we're going to wait and see. A lot of people who are, a lot of my colleagues down in Capitol Hill are sort of saying, nothing is going to happen to this for a while. It's going to take at least a year to go through all the comments and to come up with a final rule. And if we have a different administration, God knows what's going to happen. It may not happen at all, or it may just be put on a back burner, or it may be sped up and be one of the first things that comes through. We don't know. It's going to be very interesting, but very impactful for the entire payments and financial service industry.
This is consumer, does it not apply to small business or corporation?
Yeah, it does apply to small businesses as well, I think.
No, it's only consumer. In fact, it's only in the proposal limited to Reg E transaction accounts and credit card accounts, which the Bureau likes to put out things, interpretive rules now to call things that were credit card accounts, like BNPL. But that's another soapbox. So one day your auto loan could be called a credit card and that'll be swept in. But right now, no, it's only those. So it doesn't even cover mortgages and auto loans and personal loans. It doesn't cover investments and insurance. All these things that, like James' company covers all these use cases, but the Bureau doesn't have jurisdiction over those things. So it's quite limited to start.
Sure.
Just
or knowing that GDP growth for open data largely comes through SMEs and the move from open banking to open finance to open health, open energy, and data. Is there a roadmap on path, or are we just looking basic consumer only, read only, or is write as part of?
So remember, this is the CFPB. The only area, now, this current, I'm not trying to put down the current administration, but there was a statutory requirement 1071 for small business data sharing, because the spirit of that is that very small businesses are kind of run on personal credit, and so there's a fair lending data requirement there. But that's about the limit of the CFPB statutory authority into anything, beyond consumer protection. So I think that is a question of when the Bureau scope expands and who's going to expand it beyond the authority.
And I think when I say
Sole
keep
proprietorships and things like that.
lots of, just preempting some questions, the US has not been regulatory led in the way that Australia was, or UK was, or others. And data is already being shared on a much, much broader base of just field of data than what is happening in other markets. So we have been industry led, there is a lot of data flowing in the investment space, in the loan space, that is not covered in the current rule. And Director Cho was very clear that they had to draw a bright line somewhere, and it just was run very easy. Lots of hands.
Yeah, question. So I manage a social impact private equity real estate fund that would not exist if it wasn't for the Jobs Act, which allows me to advertise to raise money. And so to make our investments in commercial real estate in Black neighborhoods. And so my question is, 50, 60, 70 years ago, discount brokers changed the stuffy brokerage business. Remember the old commercial, I'm dating myself. But anyway, let's not do that. But, so today, who are the winners? So regulation made my business. Who are the winners and losers in this? And who will be fighting it tooth and nails?
Well, from what I've seen, the bigger the banks, the more they are fighting it, just because they view the data as an asset and a source of power.
And I think the irony of that is the biggest banks have all stood up open banking APIs, right? They have a massive competitive advantage because their customers are getting, more secure, faster access. So as much as they may be fighting back against implementation of the rule and sort of compliance deadlines, they're years ahead of the rest of the industry in terms of data is flowing, it is working.
Yeah, I would not to quibble with my esteemed hostess here, but I'd like to offer a little inside baseball. So first of all, those consumer protection principles, the non-binding, I drafted those. I also wrote the ones for president. And I'm proud because those were done under Director Cordray, actually.
Yeah.
And so what's interesting is when the Bureau was first formed, controversial, right? Who wants a new regulator? But we had a lot of statutory rulemakings, and so we focused on that. We looked at 1033 early on. I think it's beneficial. There is, what do you call it, the 7 stages of acceptance and all this. We were not at a point at that point where I think if we had written a rule, it wouldn't have been informed, and it could have been detrimental to the marketplace. And what Jane talks about is right. I can remember being in a meeting with the CEOs of the 10 largest banks, probably back in 2013 or 14, and the CEO of Wells Fargo complaining about, the online banking hits of some of these Fintechs. I think today, and by the way, under the Trump administration, I think there was not an appetite for writing a lot of rules, but there was a lot of appetite for helping to work with the market to figure out the right path. And so that ANPR, which is an advance notice of proposed rulemaking, that went out under, right before President Biden came in. So that was under the last administration. I would say at this point in time, among the large banks, we keep saying large banks and Fintechs, but as Jane pointed out, the large banks are consumers of this data. And let's face it, I mean, in some ways, it's good if BNPL is called a credit card. I would think, the benefit of, if I'm, Jane talked about, this fragmentation of our financial services. Right now, I'm using all these different providers. It would be really great for me to see, oh, I've got these 3 loans with a firm and this one with Klarna, and I can see all that in one place. So the benefits are on both sides, and I think the more evolved participants want a rule. They want to see the Wild West roped in. But we are at this stage right now, as Jane pointed out, where the smallest banks are not at that evolution of acceptance yet. And there's, emerging fintechs that don't know what a regulator is still probably, right? So,
I have no idea what you're
I don't know, you keep hitting me, right? I'm gonna have to hear that story.
You want to hear this story?
But, so I think we're there, but it is one of the most complicated rules to write. And I think that's it. I agree with you, Judy. Who knows what's gonna happen with this election? My gut is that the current administration wants to kind of clear the pipes and they'll finalize before the end of the year. But then those implementation timelines you mentioned are aggressive for some players, and so it will be challenged, and everything will get stayed in Texas and all that stuff. And so we'll see, but we need to move this forward. I think people want to. There's just, it's hard.
Really, one follow-up, is this the consummation, is it the same thing that the discount brokers went through in terms of their evolution? Is it the same, you can't trust the
The
consumer?
question is the consternation the same thing that the discount brokers went through back in the day?
Yeah.
You wanna know what? I don't know. I'm not a brokerage lawyer.
Yeah.
You're too young to remember, but.
I remember Putton, but I'm not sure I remember that transformation so well to know it, but,
I know from reading.
Yeah. Of course, yeah.
Sorry,
Wait, we have 2 questions here. You wanna go?
I'll go really quickly because I can.
And there's one over here that's been trying to ask for a while, but he's on the other
sorry,
side.
sorry.
Oh, she answered it? Okay.
So I came from a big bank, Bank of America, 26 years in the trading floor, trader, left as managing director in March, and dipping into the fintech neobank space, had a slight gig a month ago or so, and left because of structure and regulatory work that they still needed to get through. But I say this to, what is the competition? So the big banks, the too big to fail, right, banks versus these financial institutions, neobanks. Is Bank of America scared? Is JP Morgan Chase worried? Right, you have these smaller guys, are they getting the low hanging fruit? The neobanks, financial.
And the question is, I wanna make sure I have it, the difference between the big too big to fail to huge banks, and then the neobanks, or are you talking about like the fintech banking as a service banks?
Yes.
That do a lot more work with the fintechs?
Right. I mean, are we gonna see consumers move from, the Bank of America to now go to, the bank online?
Will consumers move from the big banks to the?
It's a very high customer acquisition cost, which Neo after Neo after Neo has found out. And they usually find that they're an additive account versus a replacement. Like, that's been behavior today.
Okay, so to diversify, clients are doing this to have another option.
I think one other thing to look at is that, banks like DNA or whatever, they have a big client base and don't want their, consumer to go anywhere else. That open banking kind of lets their consumers go somewhere else, but not leave the bank, right? Because that data is shared. So, yeah, so they're kind of like, okay, we'll allow that as long as your deposits stay with us, go do your thing, so.
That could be, wait, okay, all the way back there, and we'll move across.
So just one of the questions that in the bullet, that third-party providers must ensure certain privacy and security measures are in place, including where required GLBA. Who's gonna make sure that any of that happens?
Yeah, that was my question.
Is there even a thought of who actually is regulating the unregulated?
Well, who's unregulated in that? Can I just
We
say?
The fintechs.
Fintechs.
The fintechs,
I mean,
the data
we assume there's a
aggregators.
lot of parallel rules being written, like the data broker rule that we're expecting a draft of any day, where it looks like unregulated groups could be swept up under FICRA.
Okay.
There is, and I can only say this from my own perspective and MX perspective, we are regulated by proxy by our bank partners. Every time a bank gets examined, we get the downstream effect of that.
Right,
But you
So
see
it's
Amex
not-
and Synapse, and that's
Right.
a rather feeble sometimes
right.
connection.
It depends.
Yeah,
It's
I
the
mean,
supply
balance
chain,
sheet
right?
integrity is very different to just data movement, so I think there is a lot more work that needs to be done, and I think that interagency RFI that just came out, which was one of the key questions, was classification of fintechs. And we need a great leap forward to, to look at what is always consumer permission beneficial use case versus rando selling data to hedge funds. And at the moment, they're all kind of being pushed in together.
Got it.
One regulator I've seen get heavily involved in consumer protection is the FTC as well, right? So that, obviously the CFPB is part of that as well. So when I see, like, I know, like you said, banks are, they're regulated by, OCC, FDIC, and Fed, right? But the third parties, I've seen the FTC come in and tear it up if consumers get, injured. So in that sense,
Yeah, in different circumstances, so, again, there have been all these well-documented enforcement actions against the banks that are working with fintechs. And the banks that you are choosing to deal, offering banking as a service, you are gonna come under a ton of scrutiny. And we're seeing more and more of that as well. I know you've been waiting to ask a question.
Yeah, thanks. This piggybacks of the previous question. Do you ever see a central utility being stood up, particularly in North America, the way you've seen it in states like Singapore, India with the UPI, where players can then get accredited in order to play in the scheme?
Okay, so full disclosure, I'm on the board of the Financial Data Exchange, which is nothing even close to UPI, but it is all about an interoperable standard. So it's a standard setting organization for the industry. So what do the API specs look like? So that's kind of step one, absolute minimum. Data needs to be able to talk to each other. There's a number of organizations that have wanted to be that sort of central authority. Where it gets really messy, and I don't know how many covered institutions there are in India, but we've got 10,000 plus here, right? And then if you think 10,000 plus fintechs, the interoperability of the ecosystem here is so much more complicated than any other market. Like anyone that puts, apologies to any English people in the room, but anyone that points to the UK and says, oh, they solved it, it's like, yeah, they solved it for 9 banks.
Yep.
Yep.
So I think at this point, there's a number of different groups. We've got identity groups that have standards. You've got obviously security standards, but there's not a central utility in the way that UPI. I mean, that was by far the most ambitious and frankly the most functional of any country.
But not only, so FTX has arisen commercial interest, right? Because we're seeing the evolution away from bilateral agreements to something where we don't have to have everything. Like Jane said, there are too many nodes, that would just be impossible. The 1033 proposal does call for the emergence or the designation of a qualified standard setting organization. So they're trying to cultivate that up as part of the ecosystem.
There was another another question.
Yeah, so where do you see the next set of innovation coming in? Like the next 2 years, what kind of companies do you think would be doing great? Like open data? Is it more like marketplaces, or is it more like companies that are trying to leverage that in the banking space? Where do you think, right now, if you want to start a company, what would you recommend?
So the question
We're not gonna tell you.
what's coming down, what's gonna be coming down?
He's building his pitch deck.
I can tell you one thing I've seen is like in the Bay Area, there's big billboards already up where it says, Stripe, now supporting Pay by Bank, I mean, that's where you see the fintechs are already heavily embedded in payments, they're just gonna jump on the bandwagon. They're not, many of them are quite not there yet, but Stripe's one of them. You'll see fintechs popping up just to support payments through Pay by Bank.
Yeah, I mean, look, this implementation is gonna take a lot. So, okay, if somebody can set a certification or security standard or something, you still need somebody to ensure it, to validate it, to communicate it, and do all those things. So there's gonna be an opportunity, I think, to take those standards, just like you see with PCI or anything else, and audit them and create that. So that creates, I don't know if those are big, exciting opportunities, but there's gonna have to be a lot of work, though. K&L Gates will continue to get and the other attorneys. I think Judy made a great point earlier talking about like informed consent. I mean, we're only at the beginning. You know, one of the big debates in 1033 is you can't really ensure that a consumer or user can internalize, let alone read whatever the disclosures are. Think about how many times we just click through, right? And so one of the proposed solutions on that is restricting secondary uses of data, and there are debates about that. But you know, so there will be lots of implementation elements of this, even when the rule is finalized and gets past, you know, the courts and we all accept it. It's going to continue to be refined. I do think that the pay by bank that you had mentioned is big. I just think that you know, we will see security features and value-added services and everything layered on to these new payment rails to make them attractive for very specific use cases.
So how do we prepare? I mean, how do the banks, how do the fintechs prepare for this?
Well, I mean, most immediately, you know, beyond kind of like going through and say, okay, I accept, I have to do this now. There's the largest banks, and by the way, like we said, it's not just banks and everybody, but the largest banks have the shortest implementation timeline. They have everything from thinking about, you know, some of them may not have been sharing the full breadth of data that they'll now need to share. So that sounds like fine, okay, we'll release it. But remember, banks aren't necessarily good about having these immaculate data repositories where all data is, first they have to find that data, and then they have to figure out how to connect it to make it available. So that's part of the challenge. Then in the midst of, you know, think about this, if this goes in 6 months, are these certification standards not only going to be implemented, but then put in place to the point where if somebody has this green seal of approval, you know it's them, and you can do all that stuff. So they have to build all of these disposition and evaluation things. We're looking at the security of the requester, the authenticity of the authorization, the use cases, all those other things. There's a lot of business processes that they might be able to design around bilateral agreements. And some of the very largest banks aren't as fully evolved as the very, very largest banks. So there's a lot to do there. I mean, Jane can tell us all about on the aggregator side. There is, I think, adoption there for some of them are not working on a full API, you know, data sharing ecosystem today. So there is volume that will have to get migrated from the sharing of credentials and screen scraping over. And then there's sharing that's happening through, you know, bilaterally set APIs and things that might ultimately have to move to a standard, not to mention, you know, expectations for regulatory oversight and FCRA, and there's a lot.
The good news is you can join financialdataexchange.org and a lot of this is documented.
And just one last thing is if I was going to start a business or in that arena, right? So obviously the payment side is very big. I think about potentially, you know, on the payment side, there's a lot of third parties that are involved in risk management and fraud control. And now, like, if you can start a business that really focuses on, you know, the fraud control and the control environments, just specifically to open banking, I think that'd be potentially
Fraud with the AI increase.
Yeah.
It's going to be, it's already a huge issue. Yeah, that would be good. So, Chia, let me ask you this. What are the trends concerning large payment networks like Visa and MasterCard? Are they getting involved in open banking, and what are the potential risks they may consider?
Well, like I said, I mean, absolutely. This is, you know, when open banking came along and it started to touch on payments, that's obviously a competitive threat, right? So instead of, you know, like fighting it, they're embracing it, and you can see that. They're like, you know, this is our world. We can take it from here, and, you know, we'll run the show. But to that extent, I think, you know, one thing to look at is like I touched on, you're going to touch third parties now, and third parties are a huge risk in this arena, right? So, because you're going to share data, and you're going to maybe deal with companies that may not have the right control environment in place. So when it comes to Visa, MasterCard, they've done this for years. They work with third parties, they work with RSOs and PayFacs and marketplaces and what have you, right? Processors. So I think they have it kind of down. And you know, it's just worth paying attention to what they do in that arena to broaden that now to open banking as well.
And Jane, this is the first time in the US we've really been talking about consumer data rights. And what do you think, how do you think organizations should approach that?
So I'm originally Australian, I've been in the US 20 years, so I'll sound a little parochial when I say Australia probably was the most ambitious country when it came to data rights. Like, when we're talking about all of these rules, it's the right to access your data. Australia actually went at it one higher level, which is you own this. Now, when we all open accounts here, we assign our ownership rights to the bank or whoever is the service provider. So the construct of data ownership is a fundamental shift, because if you're the legal owner of this asset, and it's an asset, now things like privacy and security and things are a little more clear, right? Versus like, well, the bank owns it, I'm accessing it, where does the privacy sit? So I think aiming for that higher level, and it's just such a big mindset shift to, this is no longer an asset that I mine as a service provider, right? And that whole data is the new oil just makes me want to follow, because like, you've sat on all these oil reserves for years and done nothing but try and sell people more crap with it. So it's time to just like maybe hand it over and let people sort of switch into that ownership realm. So I think it's a good high standard to hold, you know, yourself to, for organizations to hold themselves to. And because honestly, after that, things like regulation, sort of the technology, the competitive market space, the ideas, things like data exhaust, monetization of data. Like, you know, we're starting to see startups that are, you know, share your data with us, we'll sell it for you, we'll give you rev share back, right? Where do they sell it? Who knows, right? So there's a lot of those sort of, now there's fourth party risk, which if it's someone's personal asset, they may be a little more judicious as to, I don't really care where my data goes because all the ad tech providers have it anyway. So let's go further, you know, 5+ years down the road, that hopefully there will be more controls around. David True.
Yeah, of course.
Hand up.
That's a brilliant idea. And I love that idea of rev share if someone uses your data. But it needs to come from a central position. You can't do it state by state. It's just, I don't think it would work. Do you see any foreseeable possibility of that ever coming about given US politics?
Rev share for?
Well, simply ownership of data, as Jane, the first point that she mentioned.
Yeah, I think it's going to stop at access rights. I don't think data ownership will be, like, it's as a sovereign asset, for me personally, I don't see it in the foreseeable.
1033 doesn't use the word ownership, it just says consumers shall have access
It's
to
a
their
data
data.
right.
It's implied, you know, so if you think about it, then the providers or the custodians of the information, and I would argue that we already see some forms of rev share today, like if somebody, you know, if you opt in for marketing, and you might be able to get something for free as a result of it, right? You know, it's just not a very front of mind value proposition that's pitched in a way that, you know, I think Jane is talking about. But 1033, you know, it is a very short part of the statute. You know, I think there's
72 words.
Yeah, it's very short, and it's going to generate. This is another reason why I think if you think if the Bureau had tried to write a rule on this too early on, I think it could have been disastrous. This is that short. The less you say, the more you think about what. Well, you didn't tell us about this. You didn't tell us.
The U.S.
about
Constitution, for example.
Yeah, exactly. Right. So exactly. So that's kind of what makes it complicated.
Yeah. Yes, question back there.
Yeah, just one last point to the question I had before. Because it doesn't really stipulate read versus write, do you think that we could just move to write data access?
Money movement?
No, I mean, I think well, we could talk about our non-binding principles and what we said there, but I think the point is that you can have access to, by the way, it says consumers shall have access. The fact that we're using a third-party agent to get access, even that, I think was debated early on, but now is accepted. Shall have access. Fundamentally, I believe that if you are transparent about what you're asking for, you're granting that for, it could be for that purpose. But to me, accessing and writing, or accessing and paying, are two things that would require two authorizations fundamentally, but I don't know that it, we see this all the time, and you could set up an algorithm to do trading and auto trades, and if something hits this or that, execute a transaction. I mean, personally, I look at it as anything a sophisticated CFO might have these days to maintain their assets in their portfolio ultimately could get pushed down to small businesses and to consumers. And so, but it has to be, if you're a sophisticated CFO in a corporation, you're expected to have a level of expertise and understanding. It gets pushed down, then the requirements for clarity, I think, just fundamentally become that much higher. But it doesn't mean you can't do it. For right now, though, we may see in early iterations, if there's just fears that somebody can't possibly consistently internalize what they're signing up for, you could see restrictions. But, when the rule is so short, the statute is so short and says you shall have access, it's really hard to justify a restriction.
Yeah, that's always what's hard, when the statute, it's very little
Yeah.
instruction, and now with the Chevron rule,
Oh, yeah.
not being
Oh,
around,
yeah.
oh my gosh, what's gonna happen? But we have one more question, and we do really, or two more questions, we do really need to wrap up. We got a late start, and we've now been almost an hour, but, okay, go ahead.
So in this industry-led model with so many complexities around, who is driving customer education and confidence in the whole new era?
Who's driving customer education?
I mean, the CFPB has.
I think the Consumer Financial Protection Bureau is gonna have a huge part of say in that, as well as local, consumer advocate groups.
I'm going to give a very contrarian response, which is education doesn't matter unless there's experience behind it. You can talk to people all you want about credential sharing and tokens and all these things. When they link an account to make their rent payment every month and now it's done, do they need to know that's called open banking or secure data exchange? No, it needs to work. So the more use cases out there that are beneficial and seamless and work, great. If they don't need to know what a token is, that's probably good.
Oh, yeah, I wouldn't share the sausage recipe necessarily,
Yeah.
but so early
They
on.
have to understand the basics.
So I do think, I don't know what the, look, I think all the stakeholders today try to educate. The challenge is, early on, the financial account providers were saying, we have your best interest at stake, we keep your data secure. And the innovators and the fintechs that are letting them have better insights and, be able to move money are saying, we have your best interest in sight because we're doing this for you. And they're both right, but, except for the best, we need it all. So I think, I think all these companies, especially if you look around FTX and everything, they're all educating. Is it a consistent message all the time? No. Are they necessarily lying? No, but they're not always emphasizing the same things. I think in this instance, one of the elements of the proposed rule is a disclosure regime, right? That would say, okay, here's what you're doing, that would at least bring some consistency. I think it's one of the hardest things, because even if, it's one thing if I'm linking something up to say, pay my mortgage every month, right? But if I'm, back in the store, not shopping online, and I'm applying for credit right then and there, and there's a queue behind me and I want to do something, I might see it, I might read it, do I internalize it if I feel pressure to complete the transaction and take out the loan? I'm not saying yes or no, I just think there's a lot of things that behavioral scientists will do, but I think that's part of why I do think the Bureau is really trying to get this right and say, let's be very specific. Let's have a disclosure regime that people can understand and learn, and hopefully it doesn't turn into like an APR on a TILA disclosure that no one knows how to calculate anymore, right? But it's something meaningful.
Okay, last question.
Yeah, so you're talking about data tokenization and owning your own data. So do you think Web3 applications, say blockchain applications, outside of cryptocurrency? Because I have Web3 startup, and it's hard for me to tell there's blockchain outside of cryptocurrency that you could use for data transfer, decentralized architecture. Do you think that owning, sharing data would be more useful in the future? Like the coming regulations would be more useful for like a Web3 architecture or decentralized architecture to share data?
So again, Judy can keep me and Jane and Jim honest on this. So it's interesting what the Bureau's done. The Bureau has, so the short answer is yes. The Bureau has jurisdiction over, bank accounts and things that look and smell like bank accounts. Their authority also ends where the SECs and the CFTCs begins, and so the whole, what is cryptocurrency? Is it a checking account or security or whatever? The Bureau, when it put out its larger participant rule that cover, Google and Apple and everybody, snuck in kind of a statement that suggests that crypto wallets would be in there. Ultimately, look, as we said before, it's been kind of wild, wild west. Collaboration through things like FTX are helping to change that, and this will be a good thing, and having broader scope, I think is generally a good thing. If you own an asset and you are sharing information around that, you wouldn't want it to be, at full risk of, the user. You'd like to have that, and I do think that's where it will go.
Okay, I was gonna ask the last question. How do we all think this will shake out, given the election year? I think we've already sort of talked about the two ways it could go. Maybe it will be pushed through sooner, who knows?
Well, I mean, we have got a lot of commitment from the CFPB, as much as you can get that this will be an October final rule. Should that happen, and then there's time for congressional review before, should there be a new administration. But I think big picture, the reason we all do this almost absent of any regulation is it's the right thing to do for consumers, right? It's good technology, it's the right thing to do, even if there was to be a massive pullback against consumer protection, which I can't think for any party that would be a good move. Would, the big banks shut down their data sharing APIs? Probably not, because this pendulum just swings back to screen scraping.
Well, I like leaving at that note. That's the right thing to do for consumers. So I'd like to thank my panel.
Yeah, thanks for having us.
Thank you.
You should run the office, right?
That's great.
Maybe see you tomorrow night.